This is the Algo Futures Trader Weekly Market Roundup, and this is the MES from Monday's trading. And I wanted to kind of compare Monday's trading in the MES with Friday. There's two different type of days, and when we look at our alpha bias, and this is from alphawebtrader.com, this is something we use before the open initially to get an idea of what direction we want to trade in and which markets we want to trade. So you can see this is currently Sunday evening, so the futures are open here, and you can see it tells us the trends are down, and it shows us the strongest of the week markets here is the NASDAQ, and the weakest of the week is the small cap, and you can see that here as well on the alpha bias. The Dow at the top here means it's the strongest of the, everything is red here, which tells the trends are down, and obviously the market is weak here. But of those markets, the Dow is the strongest, while the small cap here and mid cap are the weakest. So if you were going to short something Sunday evening, probably want to pick maybe the Russell to get short. Anyway, so on Monday, we had in our gap section here, this would have said, if we're looking at the S&P here, this would have said IGD, which meant inside gap down, right? And the color would be green. It would tell us it has a long bias. And to kind of just visually show you on a chart here, so this is a 3-minute chart of the S&P on Monday, and you can see the S&P. This was Monday's open here, gap down, and this was the prior day's close, or the prior Friday's close here. So you can see the S&P gap down below the prior day's close. This blue line down here tells you that was the prior day's low. So we opened inside the prior day's range, below the prior day's close. Well, that's what we call an inside gap down. Now, these inside gaps tend to fill. In other words, the market tends to trade back to the prior day's close. So on our alpha web trader, our gap bias would have been green, telling us, hey, even though the market opened below the prior day's close, the anticipation is we should only look for long trades, at least until this gap fills, because there's a high probability that what happened on Monday is exactly what is going to happen. So when we look at our MES here on Monday, the software made it easy because it only generated long trades. It never broke below the no trade zone to the downside. So what happens is the software would, if you have this set up to trade, and what we would do is we would turn fully automated to semi-automated and just check or uncheck the next short. So what this is going to do is see next long is checked. That's going to tell the software, hey, only take the next long trade if we turn automatic trading on here. All right, so it will only take the next long trade. So this basically, this first trade setup is the trade that it would get into. You'd execute a trade to the long side here with 3 micro lots. The protective stop would be on the other side of the no trade zone here, all right, because obviously this no trade zone is kind of noise. So we get in here. Now you see there was a lot of other trade signals that happened. If for some reason you missed the first one, you could take one of these second or third signals. But if you're in the first, your stop is back here, so you're just in this. And this is kind of how the action has been, especially that kind of first 15 minutes after the open or so, sometimes 20, 30 minutes, is it's been very choppy. All right, but it did get going. It finally got going and broke out here. Or followed through to the long side here, and so you would take two of the contracts off at the first target, and then the second would be trailing with a trailing stop below this what we call the USAR here, and that would have stopped on the last contract in profit. Right. So if we looked at our alpha web trader here. At the time, our gap bias would have been long. It would have said inside gap down, been green, so we would know only look for long trades as far as the gap bias goes. then we would also look and see which was the strongest market. If it was the Dow, then maybe we're taking the Dow to the long side. If it's the S&P was the strongest market, well, it makes sense to take the strongest market to the long side. All right, now, if we compare that to Friday's action, now Friday, this is these gaps here where it says OGD. These are left over from Friday. This won't update again until the open tomorrow. So the gap bias on Friday, if we look at the S&P here, in fact, all the markets were OGD, which means outside gap down. Well, and you see the filter here is red, indicating only look for short trades. Well, why, if we have a gap down, wouldn't we expect what happened on, Monday, where we had a long bias? Why wouldn't we expect the gap to fill? Well, if we have an outside gap down, and let me show you visually what that looks like. An outside gap down, we would expect, let me go to Friday here. So here's Friday. So this is Friday's open here. And you can see it opened completely below. This blue line here was Thursday's low. So we opened completely below the prior day's range here. So if you can kind of scrunch this up here. So here was Thursday's range here. So from Thursday's high all the way down here to Thursday's low here. So Friday we opened up completely below that. Well, what tends to happen on a day where the market opens outside the prior day's range, in this case outside down, we don't expect this gap to fill back to the prior day's close like we did on Monday. We expect that, especially as this is a 3-minute chart, if they start breaking down early, the trend for the morning will be down. So we should just look for short trades. And sometimes that trend will be down for the morning. In this case, it bottomed around 11:15, 11:30. But sometimes it will just trend the whole day. All right, so this is one of those days where at the open, if it breaks out to the short side, we just want to go short. Because we don't anticipate that they're going to be able to fill this gap, right? It's a much lower probability on a day like Friday. So the S&P on Friday had an outside gap down. The gap bias was short, and so if we go to Friday's action here. Go to the open. All right, so here on Friday, now it took, again, it's been choppy. And so it did trigger short around 9:42. So about 12 minutes after the open, again, the protective, you'd be short 3 micro lots here, the protective stop on the other side of the no trade zone. All right, so we got an initial move here. It wasn't far enough to get the first set of contracts off at the first target down here. It pulled back into 10 o'clock, which is typical as well. Once 10 o'clock comes, it tends to roll over and go on to make a new low. And it did make a new low. And then, again, a little bounce here. Again, very, very choppy. And then finally got to take 2 contracts off at the first target here. And the balance stopped on a trailing stop. But this is one that we don't expect the gap to fill. So we expect the market's going to trend. Now, we didn't get much of a trend. It was been pretty choppy action. But at least we're staying on the right side of the market, and that's the important thing. So hope that's helpful. Again, you can look below. You can download AFT 7 or AFT 8, which is in beta right now, and use this for free for as long as you want. If you want to use it to qualify for funding, whatever you want to do, get proficient with the software. There's a ton of educational material. You can sign up for the Discord server. That's free. We have a trading floor, start around 9 o'clock in the morning. And we look at just what we looked at here at the open and set the software to trade whichever markets that we think in whichever direction that we think the market's going to break out in. And All that stuff is, all those links are below, and it's all free. If you decide you become competent, you want to purchase a license, you can do that. If you want to lease, you can do that as well. All right, hope that's helpful, and we'll see you again next week.